Just hitting the record button, and then I'm sharing my screen with you guys. All right, and then we can proceed with our exercise. Okay. So where were we? All right, so we said we're going to look at those demonstrations when we meet together in class. All right, so when we moving forward, we are obviously looking then at apportionment of overheads. All right. And so here, all that they're really speaking to is that you have obviously the service department and you also have the actual manufacturing department. Okay. So what you obviously want to be aware of is the fact that your servicing department, it doesn't necessarily generate anything, okay, but obviously it creates expenditure, all right, and then these expenditures need to be apportioned to the other departments, in other words, the manufacturing departments, okay. Then there at the bottom, it just says, when one service department provides services to another service department, this type of service is regarded as an interdepartmental service or services. Okay. The reason why overheads are apportioned is to ascertain the real cost of producing a product, taking into account the cost of all those service departments that help get the product onto the shelf and ready for sale. Okay, this is why we say the cost of this product is not just how much we paid for the actual product or for a unit of that product, but it's also the things that we did in order to get it ready for sale. Okay, because then if we don't incorporate that, then obviously how are we going to pay or allocate the costs to these service departments? Okay, but let's move forward. Okay, there are three methods that are commonly used to reassign service department costs normally. You have the direct method. Okay, according to this method, all service department costs are reassigned directly to the manufacturing department costs are reassigned directly to the manufacturing department. Okay, so we just repeated that there. Okay, so basically there, let me actually remove it now. So basically here what's happening is that your service department costs are then being directly allocated to the manufacturing department, all right? And you might have different manufacturing departments. So now we're saying, okay, which manufacturing department then obviously used these services, all right? So we'll look at, let's say, the total services that were used were worth 10,000, all right, from that specific service department. Then we'll say how much of it was used by manufacturing department A and manufacturing department B, okay? And then we'll apportion it accordingly, okay? Step 2, given partial recognition for interdepartmental services, one must determine which department provided the most interdepartmental services. The department's total costs are then reassigned to the remaining service departments and the producing departments. Okay, so here it's really about, okay, so for instance, we have accounting. This is an interdepartmental service. Okay, every department is going to need accounting because in every department you have somebody, you have staff, okay, you have costs, that need to be catered to, and some departments have incomes. Okay, some departments, like typical service departments, don't necessarily generate an income most of the time. Okay, because here we're talking about manufacturing companies. Okay, so you'll find that the accounting department needs to monitor the costs and incomes and so forth of those departments. So there now we're saying, okay, what is the total cost of our accounting department? All right, how much are we paying our accounting staff? Then we say, okay, how much work do they do in relation to the different departments? And then we assign it accordingly, okay, based on the total cost. Okay, then the next one, okay, no, this is just talking, the service department whose costs are reassigned first receive no allocation, and other service departments, even though it may receive services from them. All right, this procedure continues until the last service department allocates its total costs, including all costs received from other service departments, to the production department. Okay, so again, this is one of those that will make more sense when we actually do it together. So yeah, for now, you can try and understand it to the best of your ability, and if you do, perfect, great, awesome stuff. But if you don't worry about it. I think when we do activities, when we run through examples, and that's what you can do in the meantime, you can run through 1 or 2 examples. You can see there on the page or on the slides, I have actually written where you can actually get these examples. There you can see example 5.4. The pages might be different in your textbooks. Okay, so just go through that, and then we'll also do that together as well. All right, just to make sure we are all together. Okay, then predetermined overhead rates. Okay, predetermined overhead rates. Okay, in order to keep track of the cost of overheads, a clear understanding of the following concepts is needed. Okay, we have the actual manufacturing overhead costs. This is the actual or real cost of overhead to the manufacturing enterprise. Okay, then we have the budgeted manufacturing overheads. Okay, so these are the total expected overhead costs. Okay, total expected overhead expenses. Okay, so actual, this is what we actually have incurred by way of overheads. Budgeted, what we expect or anticipate. Okay, then allocated or applied manufacturing overhead. Now this is the rate at which we are going to apportion our overheads to the respective departments. So there, if we read, it says these are overhead costs allocated to the production process during the manufacturing period, okay, according to a predetermined rate based on the budgeted overhead costs as well as the expected capacity of production. Okay, so sometimes we can't determine exactly how much we are going to spend on a certain product or thing. So what we then do is we say, okay, but in order for us to have some decent estimations, let's create a applied manufacturing overhead. All right, and then based on, let's say, for example, labor hours, we'll say, okay, we anticipate that we will be paying 15 Rand per hour for our labor. So what we will then do is then we will say, okay, cool, no problem. Then let us use that 15. It's the expected or allocated manufacturing overhead rate. Okay, so we use that as we go along. But then at the end of the financial period, that could be at the end of the month or the end of the year, we would then say, okay, but what did we actually incur? What was the actual manufacturing overhead? Okay, So we use the budgeted manufacturing overhead to calculate this allocated rate. Okay, cool. All right, so here now it's saying predetermined overhead rates. The following bases are generally used in the calculation of allocation rates. You have the budgeted units of production, all right, measured in rand per unit, okay? You have the budgeted labor hours, okay? The allocation rate then would be measured in rand per labor hour. Then you have the budgeted labor costs, okay, measured in percentage of labor costs. Okay, then you have the budgeted material cost, okay, measured in percentage of material costs. Okay, all right. Then we have finally the budgeted manufacturing hours, and that again is measured, the allocation rate is measured in rand per machine hour. Okay. Okay, all right. Again, this is in relation to predetermined overhead rates. Okay, so here they're saying the following formula is used for calculation of predetermined rate. Allocation rate is equals to your budgeted manufacturing overhead costs. Remember, I told you that the budgeted manufacturing overhead costs, all right, is we use that in order to determine our rate, okay? Then divided by the chosen basis, okay? Let's read on. Let's see what more we can gather from here. It says allocated or applied overhead represent the amount of overheads recovered during the year and brought into account in order to determine the total production cost during the course of the year before the actual costs are known. Okay, so again, why do we have an allocation rate? So that we can estimate roughly how much labor costs are we actually going to incur for this specific department. Okay, so here we're saying budgeted manufacturing overheads. This is a total. Let me quickly just highlight it. Actually, I can use my pen. Where's my pen? Yes. So let's play around with this. Okay, there we go. Okay, so here we're saying this budgeted manufacturing overhead costs. This is the total, all right, whether for the year or for the month, okay? And then we're saying divided by the, that's what we were looking at in the previous slide. Okay, measured in rand per unit, okay? Okay, remember here we said the following bases. The following base are generally used, okay? Not bases, base, my apologies. Okay, so what base we're going to use will depend on the type of rate that we're trying to obviously obtain. If we're trying to get the labor hours, for example, we then say, okay, what is the total? Here I'm just going to do like a random example. So what is the total manufacturing overhead? Okay. So if we say 200,000, that's the cost we expect to actually incur in terms of labor hours. Then we say divided by how many labor hours do we anticipate to have. Let's see. How many labor hours do we anticipate to have by way of our capacity? Let's say we anticipate to have 500 hours, okay? Right? So then we say, okay, 200,000 divided by 500. Let's just quickly cancel out these zeros. Okay, so 5 into 2,000 here. This is going to be 4. So now our allocation rate is then going to be 400 Rand per hour. Okay, that's our labor allocation rate. So in other words, now as we go on through the financial period, we're going to be saying for every hour, for every, let me say, labor hour, okay, we're going to allocate 400 Rand. Okay, so then all we then need to do in order to allocate our labor is then say, okay, how much time did we spend manufacturing product A? Okay, that took us 30 hours. What about product B? That was 40 hours. Can you see now how we can allocate to the different departments? Okay, we know product, this department is doing product A, that department is doing product B, and that other one is manufacturing that. So can you see now, using the allocation rate, instead of waiting until the end of the financial period for us to then determine you know, the cost of this thing in terms of labor rate. Okay, but anyway, I hope you're now getting a bit of the gist of the whole point. Okay, in order to determine the cost of production during the year, okay, the following calculation must be done. We must calculate the direct material cost, we must calculate the direct labor cost, and then the applied manufacturing overhead cost, and then we get our total manufacturing cost. Okay, so this was just one example. We used labor hours, but then also we then could have these other ones, and you don't always have every one of these. Okay, we might not be using machine hours to produce our product, so but we then might have obviously material cost, and then we have to labor. All right, but then in another company you might also have machine costs. So it depends on the business. Okay, it depends on the business. Okay, right. Anyway, I think I've dwelt long enough there. Let's continue. All right, so then we have underapplied and overapplied manufacturing overheads. Okay, right, I'm just going to explain this in a nutshell. Overapplied, all right, how do we determine whether something is underapplied and overapplied? Okay, we then have to go back to say, okay, let me just change this color, let's go with green this time. So we then have to say, okay, remember, when we're doing the whole allocation rate, it's an estimate. It's not what we actually incurred. So when we're now at the end of the financial period, we now need to say, did we overestimate or did we underestimate? That's pretty much what we're doing. So we say, what was the actual overhead cost? What was the actual expenditure on labor hours? Then we say to ourselves, what was the applied rate? In other words, what did we estimate? All right, in terms of overhead costs. If what we then get, the difference between the two, in other words, if our, let me just use a different color here. Oh boy. If our applied, all right, and I'm just going to use simple figures here to drive home the point, is, sorry, if our actual is 500 Rand, okay, and our applied overhead costs were 400 Rand. Can you see something here already? Somebody tell me, is this under or over applied? Somebody tell me there in the chat. We're obviously going to have an amount of 100 Rand difference. Okay, but tell me there, is it over or under applied? Somebody tell me there in the chat. Is this over or under applied? Right, we have our actual overhead is greater, can you see that? This is greater, our actual is greater than that of our budgeted or our applied. So is it over or under applied manufacturing overheads? Okay, so someone is saying under, another is saying over. Okay, so thank you both for obviously participating. It is under, and I'll explain why it is under. Can you see what we budgeted is less than what we actually incurred? So in other words, we have underapplied. Okay, we have underapplied. Okay, you might have a different scenario. Let me change this here. Okay, I'm gonna once again explain this in the simplest form. This time we have actual of 600. Okay, but then the applied overhead is actually 700. Okay, or let's just spice it up a bit. 750. Okay, obviously then the difference is going to be 150. Now, have we over applied or under applied our manufacturing overhead? Okay, so here, Kirsten, you would be right. Okay, I know you didn't respond necessarily in relation to this, but just in the interest of time, thank you, Megan. 100%, thank you, Kirsten. All right, this time it's over. Because what we're basically saying is what we budgeted, all right, we budgeted more than what was actually incurred, what we actually incurred, okay? So in other words, we put too much, okay, right. If the actual overhead costs are more than the applied costs, it is said that overhead costs have been underapplied, okay, which is exactly what I was saying. And if applied costs exceed the actual cost, the overhead costs are overapplied, which is exactly what you guys have communicated, okay? The difference between the actual and applied overhead must be brought into account by means of general journal entry. Okay, remember from your accounting days, all right, just a quick recap. Wherever you have an error or something that needs to be rectified, we do it through the general journal, all right, whereby the cost of sales account is debited, okay, because obviously here we're talking about inventory, okay, so if we're in a case where it is under applied, okay, right, in other words, we budgeted less, because remember we're recording this stuff as we go along, during the financial period. So if we under applied this 100 Rand right here, we need to enter it into the cost of sales account by debiting the cost of sales. In other words, increase our costs. Remember, cost of sales is an expense. So since we under applied, in other words, we budgeted less or recorded less than we should have, that means that now we need to debit ourselves, increase our expenses, okay? And credit in the case of over applied. If we over applied, in other words, we charged ourselves more than what we actually charged, what we actually incurred, that means we need to reduce our expense. Okay, so in other words, what do we need to do? We need to credit this particular expense account. Okay, so then we credit cost of sales. Okay, all right, awesome stuff. Okay, all right, activity-based costing. Okay, so this is another form of costing. All right, is a cost model used to assign manufacturing overheads to different products produced by a manufacturing entity based on the premise that products consume activities and activities consume resources, which incur costs. Okay, so products consume activities, activities consume resources, okay, which incur costs. Okay, therefore the costs of activities should be assigned to cost objectives on the basis of activities they consume. So in other words, here we focus on what are the activities that result in costs. Okay, all right, ABC assists in reducing in reducing product cost distortion by creating a cost pool. All right, that activity, cost assumed by activity, for activities that can be identified. So in other words, cost drivers, and then assigning overheads to products based on the actual number of separate activities they require for completion. So in other words, we look at certain activities. So for instance, which activity can we say? Okay, let's go on. I can't think of anything at this moment, sorry. By reducing cost distortion and enabling a more precise product cost estimation, an organization can obtain a better understanding of product costs and profitability. Okay, by identifying inefficient and unnecessary costs and activities. Okay, this is how you realize a better understanding of profitability. Identifying profitable product and activities to allocate more resources to them, and then facilitating improved product control and pricing. Identifying and eliminating products that are unprofitable. Okay, cool. So these are the benefits, obviously, of activity-based costing. Okay. Why am I failing to think of an activity? Okay, then finally here they're talking about alternative, they're talking about another alternative costing system. Okay, why is this thing just flipping on its own? Okay, traditional costing system and ABC. Total manufacturing costs, product costs consist of direct costs. All right, direct costs pertain to direct materials and direct labor. And then indirect costs, those are overheads. Right, the different, okay, I think my PC is misbehaving now. The difference between traditional costing systems and ABC is how overheads are allocated. Okay, with ABC, we're allocating based on the activities. Okay, did we use labor hours? Did we use machine hours? If we did, then we allocate based on those activities. Okay. Direct costs are calculated in the same way for both traditional cost systems and ABC. Okay, so here's a table on the difference between the two. Can be further explained as follows. Okay. All right, so you guys can go through this in your own time. Okay, I won't hold you to it right now. Calculating product overhead costs using ABC. Allocating overhead costs using ABC involves 5 steps. Firstly, identify major activities. Okay, identify the activities that consume resources. Okay. Okay, does labor consume resources? Yes, because we have to pay for that activity. People don't just come and spend time sewing shoes. We have to pay them for that. Assigning overhead costs to the cost centers. Okay, overhead costs are assigned to particular activities on the basis of cause and effect, cost drivers. Okay, so in other words, we've agreed that obviously labor hours will result in costs. Then we say, okay, cool. That's a cost center. This department is a cost center because it uses those labor hours. Then we say determine the cost drivers associated with each activity. A cost driver is an activity that causes a cost to be incurred. Okay, so the use of labor hours would then obviously cause the cost to be incurred. The more complex the operations, the more cost driver activities are likely to exist. Okay, so hopefully you're dealing with straightforward stuff. Activity cost drivers should explain the overhead costs in each activity cost pool. Be easily measurable. Okay, we can measure labor by the number of hours. Okay, by the number of hours used. All right, be related to the product. Okay, we have to, if we're going to include it, it has to be, those labor hours have to be used. Okay, it's not about you know, just saying, just randomly allocating stuff. Those labor hours have to be used in order for us to obviously allocate it to that product. Okay. If there's no relationship, that means the cost, then there shouldn't be a cost allocated to that product in relation to that cost driver. Okay. Then calculating product overhead cost using ABC. Okay, so we're continuing with the steps. Calculation of cost driver rate. Okay, so now that we've established that yes, there is a cost driver there, and yes, hours were used, then we say, okay, calculation of the cost driver rate. The driver rate is calculated as the activity cost driver divided by the volume, by the cost driver volume. Okay, so again, here we're saying, what was the total cost of labor? It was, I think here we calculated it. Let me go back just to show you. Somewhere here did I pass it? I think I did, because this is what I'm looking for. Here we said we budgeted 200,000 worth of labor hours, and then the 500 labor hours is what we have as capacity. So let me quickly go down. So here we're talking about what? Activity cost. Okay, activity cost we're saying is 200,000. Continuing with that, you'll see that we're doing exactly the same thing, divided by the cost driver volume. What is the volume? In other words, the capacity. We have 500 hours. Okay, so then the rate, again, can you see, is going to be what we calculated earlier. What did we calculate earlier? We calculated a rate of 400 per hour. Okay, so here, 400 per hour. Okay, so we now have the rate. The next step is to assign activity cost to products. Assignment is done by multiplying the cost driver rate, what we just calculated over here, highlighted in yellow, in green, sorry, by the number of cost driver units consumed. In other words, the number of hours. Okay, so we'll say 400 Rand per hour times how many hours did we do this activity of labor hours? Okay, we spent 50 hours. Okay, so then that is going to be then the, so can you see it's very similar? It's only that with activity we're now more specific to the particular product, as opposed to saying this department spent this, that department spent that much labor hours, and then just allocating it to department. Here we're allocating to the specific product because we want to know what did it actually cost us in relation to this specific product, so we know the actual exact cost for that product. Okay, using unit-based drivers to assign overhead. So again, this is just another method. Unit-based activity drivers are activity directly related to the level of production. Non-unit-based activity drivers measure the demand products place on activity that are not related to the level of production, e.g. machine setups. Okay, can you see with machine setups, we're not making anything, we're literally just installing the machine. So how do you then allocate such a cost? Okay. Using only unit level activity drivers to assign non-unit related overhead costs can create distorted product costs. Okay, so here we're just saying the extent of distortion depends on the percentage of non-unit level overhead costs to total overhead costs. The smaller the percentage, the lower the level of distortion. Okay, so here it's a bit problematic because basically we're saying these costs need to actually be settled. The installation of this machine took place, it needs to be catered to. So let us then just let's allocate the setup or installation costs by way of how many machine hours was used for each respective product. But can you see that's a distortion because we didn't actually produce anything with that setup or installation. So yeah, it's a bit tricky, but at the same time, those costs need to be allocated. Okay. Advantages and disadvantages. Okay. Those you can read through in your own time. Okay. But yeah, the primary advantage there is it improves cost estimation and product pricing, because obviously we've estimated more efficiently our cost for that particular product. Therefore, we're going to price or sell our product with a better knowledge of our cost. Okay. All right, guys. So that is the theory to unit 5. So when I see you, I think it is on Friday. We're just going to do some exercises out of activity 5. Probably might do it. We might stay in unit 5 for another week, okay, before moving on to unit 6. We'll see how far we can get on Friday, okay. And then just a reminder, please go and ensure that you complete your ICE task.